Hey B, just going to post reply to your post you put in the Telegram group there regarding the Aussie USD. I hope you don't mind the YouTube format. And when I look at this, I'm going to be looking at it from top-down perspective. I hope I don't bore you, but here we go. So this is the Aussie USD weekly chart, yearly pivots. Ignore the pivots if you don't know much about them, just ignore them. For the last 2 years, as quite clearly, we've had a good, strong downtrend. You're aware of that. Everybody's aware of it. My toolbars aren't working at the moment for some reason. So the good, strong downtrend for 2 years. A downtrend like that, it's not going to stop on a dime. It's got a form of a reversal pattern, and respond clearly to a level. You can have a look at my pivots here, my yearly pivots. You see that and these pivots were drawn late last year. They're dynamic. They get drawn as this price action occurs on the previous time. So the yearly M2 worked, was relevant. No, that one wasn't. The yearly M2 was relevant. And so has been the yearly S1 has worked. So there is some correlation there. But anyway, what have we done? We've had a big long 2-year downward trend. We've got this channel here has been really powerful. It's also actually pretty close to the daily 200 MA, SMA, which we'll look at shortly. Now, if you were going to stop this trend, what would you look at? How about a double bottom, higher high, higher low? So that's one thing to consider. But based on this and the 200 MA, we can't look at this with the higher high and say, yes, we're away, we're off to the races when you got this ahead of you, because this has been holding for a full year. So, that's a bullish perspective. A bearish perspective, every time it's come up and hit this level there, bang, here, bang, here, bang, here, bang. Here he is it again, here, bang. So that suggests, because here we had a double bottom, higher high, hit this level and bang, down she went. So is that what's happening at the moment? So let's change now to a daily time frame. These are monthly pivots. Again, if you don't know much about them, just ignore them. We started the month here off this channel that I was speaking about. There's a 200 MA, but didn't quite get to it, but it's pretty close. And so that's been powerful for some time now, as I'm sure you are aware. Oops, wrong direction. I know my toolbars aren't working, but that 200's been really, really effective for over a year. So it cannot be ignored. Same as this channel, and it's worked again off the monthly M3, which is quite amazing. It ignored this very important level here. Price did. Came up and respected that channel and the monthly M3. So it's got to tell you something. So on a daily perspective, as I said previously, whenever we've tested this this zone here, she's come down quite heavily. And like I say, it ignored pretty much this level here, which has been a strong level for months now. It's proven itself 1, 2, 3 times. 4 times here, but then it needed this monthly M3 and this zone here to bring it in. So here we're at that monthly M2. So this monthly M3 is a bearish zone. That's where the bears jump in. This M2 is where the bulls jump in. So the bears sold here and got down to here, and the bulls jumped in. A rejection off the central pivot, which is quite understandable. We've also got a crossover of the MAs. However, price has been going sideways for months. So the MAs really don't apply until they do. But when you're going sideways, what's the use of an MA, really? So what do we need? So basically what I'll be saying here is I'm pretty much agreeing with you after all this waffle. So sorry to bore you with it, but anyway. If we break below here, we could be off to the races just like we were here and here. That's what this all suggests. But we need this level to break. If it holds, if it were to hold, what's going to happen? First of all, we've got to get through this level here, and then we've got to get through this zone here, which has been impossible for over a year. So, you know. So at the moment, favouring the downside, and even if you went long, you don't have a lot to go. A lot of risk. You know, if you went long in this area here, would you put your stop below this level here? That'll give you a pretty good risk reward. But if you had to go down this far, or even down to here, the risk reward just gets blown out of the water, because you cannot assume you're going to go past this. It just, you know, one day it will, not just yet, but seemingly. So we'll go down another level here. Time frames 4 hours. Now we've got the weekly pivots. What this is telling me, I'll try and finish up here so I'll stop boring you. Rectangle. My sell zone for this lot is here. This is where I'll be looking to sell if I'm going to go short here. Change this to my lime green, I think it is, chartreuse. So that's area there, that zone there is the area I would look to sell if I was going to sell this. And based on this, can only sell, right? The central pivot held, and the M3 held, this grey line up here, the monthly M3, is your monthly central pivot. It is riding, the monthly pivots are in play here clearly. They worked here, they worked here, and they worked here. So the monthlies are in play, and they worked here, and here, and here, whatever. So if you're looking to short this, unless unless you're waiting for the break here, otherwise, if you wanted to take a shot prior to that, this is the way I would play it, down to there. That would be a weekly play, but of course, looking at it from a monthly perspective, we have, let me get this out, let me go back to daily, time frames, daily. Based on this sell, that level there, that gives us a target, right, this level here, that level right there. So this, we got a week to get here. But of course, because of this particular level here, if it got down there, you'd take profit there. You know, I mean, it's just be absurd to try and push for an extra few pips to get past that level. You just take your profit there. So for mine, for a short, for this pair, that would be the play. I think using the boys playlist, obviously you're looking here. I'll just make them a bit thinner. Okay. So you'd be looking, if you're using the boys playlist, of course, you'd be going using this one. You'd be up there or wherever. You'd be down past here, and then you would be back to here, and then you'd sell from there, of course. Now what your target would be, I don't know, entirely up to you, but obviously, quite obviously, that's your target there. Now another thing is, I might just run this past you for next month. Alright, so this is the last week of the month. We got 2 days off at the end of this week. The US is not trading. Huge liquidity out of the market, which can make things particularly dangerous. So it's a 3-day week, really. I'll be extremely careful at the end of this month, end of this week, because you got 2 days off for the US. There'll be very low liquidity, yes. So, but other than that, another thing I would point out, for me, front running next month's move, this is your sell area up here. So if you were looking for this short next month, that's where you would be looking to short. So if this doesn't work, the other option is up to here, that level there, and then down to here somewhere. So this would be plan A, plan B, say, plan C, down to this level here again. So there's plan A, plan B, plan C for me. There's plan A up to here and down. Plan B is a break of this level here, back for a retrace and down. Plan C, if it keeps going up here, up to this level here by the end of the week, which would be week USD, through to the end of the week, then you sell up here and down to here. That's if you're looking to sell this. If you're looking to buy this, it would be a totally different plan. Your plan would be buying in this zone here, anywhere in there, which is where we are now. So you could front run this now for a move, and that would take you up to here. Come on, baby. And that would take you from this area here, this line here, or this zone. Oops, what happened there? Oh, come on. You're there, you're out of the road. So that's up into this area here. Alright, that's if you want along it, because that'll give you a double bottom, higher high, higher low, higher high. Alright, so it just depends on which direction you want to go. Do you want to be a bull or a bear on the USD, or a bull or a bear on the Euro? And that's the plans I would be looking at depending on your thing. Alright, so a short is plan A up to this zone here on the weekly stuff, and then down to this level here. Plan B is a breakthrough, retrace, retest, and down to this level here. Monthly for next month, if we're up here at the end of the week in this zone here, like I said, we're up to this zone, you'd be selling next month, next week, for a target down here again, which is not so bad, because if your target is down here, the higher you go to get down, the bigger the profit, right? The higher you go, the further it's got to travel to get down to your zone. Because, I mean, if it breaks here, it's going here, no question. And if it gets here, can it go beyond here? My word, of course it can, and probably will, in my opinion. But if you're looking to take this long, because I think I said the Euro before, no, this is the Aussie USD. Please take back anything I said before, I take that all back. But, you know, that's my perspective. Right up, thanks for listening. I'll post it.